Good morning. It is Monday, December 20th, and the S&P is down another 0.5% from last night. We were at 44.65. This is where I put on that sort of intro to the PayPal Disney trade, and we're down about 30 points from there. Rallying right now as we speak, but yeah, definitely a bearish looking chart. Interestingly, Vols remain somewhat muted, given that we've sold off 200 points in 48 hours. So, the jump is not corresponding to the jump that we had in November when Omicron hit the tape. So whether you think the S&P rallies here today, which I do in the very short term, or not, it is clear, and I hope that this kind of makes a point, that the window to, let's call it 4,400, is still open before the end of the year. So let's just look at the monthly. There's a monthly chart. Now, pardon my saying so, but this looks like a very, very bearish chart. These two sell tails, the market doesn't want to stay above 4,600. Remember on a daily chart, we had all that trouble about 4710, or 4,700, all of those sell tails above 4,700. On the monthly, it's looking like 4,600. Now, can you have two consecutive monthly sell tails and then rally? Absolutely. Is it likely? No, it's not. And then likewise, this one doesn't look that bearish yet, but it is starting to look like another quarterly sell tail. So this one's sort of like, it really has to get down to 4,400 for this to look like wickedly bearish in my mind. Now, do I think that we're going to enter a bear market? Kind of, right? Like I kind of do. I kind of think that I think the closest analogy right now, my working hypothesis is that the S&P is going to look a lot like the 70s. I really think that inflation is going to be the story of the early to mid 20s. And I think the S&P won't perform very well in nominal terms during that time, and it will perform rather poorly in real terms. Real terms meaning after adjusted for inflation. So I expect a big chop over the next 3 to 5 years. That's kind of my baseline working assumption. All right. I smile because the ability to predict something like that is like close to zero, right? Like, let's be honest. All right. So if we can rally back in the next 20 minutes, back up to, the 45.50 area, then I think that opens up a really good chance of a rally today. We'd have 3 buy tails on the 4-hour chart. If we can't, it might be a bombs away day. It might be a hello, Senator Manchin. I'm interested in the market. I don't have interests in the market, meaning like I'm not going to knock on a senator's door in order to get him to change his mind. When I say knock on a senator's door, I mean, if the stock market crashes, it's kind of like saying, dude, we need this fiscal stimulus. We'll see if that happens. I'm still leaning toward like, there's that Santa Claus rally and all the positive flows and this and that. And we've fallen 200 points in 2 days. Yeah, I'm kind of leaning more toward the, hey, let's finish the day green, which would be extraordinary at this point. It seems unlikely, but it's still possible. And then the last thing I wanted to show before we close down here is an update on the crude S&P ratio trade. There's the daily. So once again, crude is underperforming. Now it's more volatile in the series. So basically the volatility is going to trump, if they're both going the same direction, like they are right now, volatility in crude is going to trump the volatility in S&P, and you're going to get a decline in that ratio. That looks like a terrible chart. I'm going to be honest. I would not buy here, which kind of increases my bearishness on the S&P. But it is getting down to, this area where there's lots of buy tails beneath 65.50. So we're only $1 away from that now, where I would start becoming a very curious and interested buyer of crude. So yeah, that was the daily ratio. Again, we're still above the 50-200 cross. So now I'm sort of moving toward thinking that ratio is going to come back to 62. If it comes back to 62 and we're at the current levels in the S&P, then that would imply crude at 73 bucks, which is a ways from where we are right now. Zooming in on the hourly ratio chart, that looks like kind of a healthy rally to me at this point, frankly. So yeah, you know what? We could see just a really dirty day in S&P and crude. I think that's becoming more likely as this hour closes, unless the S&P can really find some legs here in the next 17 minutes. Could be an ugly day on Wall Street. All right. Cheers, everyone. Hope you have a good day. Bye-bye.